Metals continue to rally for the second straight day as rate cut guidance and a possible stimulus in China sparks optimism. Delta Corp surges as the board approves the demerger of its realty and its hospitality business, which will be housed under listed entity Delta Penland. Investors will get one share of the demerged entity for every share that they hold in Delta Corp. East My Trip corrects nearly 8% after a big deal sees nearly around 10% equity change hands at around 38 rupees per share. Promoter Mr. Pithi is likely to have sold 8.5% stake. Piramal Pharma surges after bullish guidance at its analyst meet. Shares rise after the company says that it has ambitions of being a global pharma company by 2030 and is eyeing $2 billion in revenue and 30% EBITDA margin by 2030. And Power Grid surges close to 5% as the Ministry of Power finalizes the National Electricity Plan from 2023 to 2032. Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me today is Vivek Iyer. Well, Vivek, it's a day of consolidation, so to call it. We've seen a heady run. And for the time being, the Nifty is down, I think, 25, 30 points, par for the course, one would say. So the metal index continues to shine along and the Nifty Bank is holding one end up.
Good morning, Nigel. Pleasure to be here. The most important thing that we saw yesterday was that the 26,000 mark, as far as the Nifty was concerned, that's something that didn't hold on yesterday. We've not closed above that, and we've seen quite a bit of sell-off from those levels. So that is going to be very important going forward. And also, like you mentioned, metals are doing quite well. Some of the power stocks and ancillary stocks are doing quite well. Power Grid, in fact, one of the top gainers today. But quite a lot lined up on the show.
Well, that's right. Vivek, it's not too often that on Chartbusters I feel a little tiny in front of someone. But that's the case today because Vivek outbeats me in terms of height. But that's as a side note. Well, let's get in Soni Patnaik, who joins us for a technical check on the markets. Hi, Soni. We're down 30 points. What do? Rush in to buy or wait buy?
Good morning, Nigel, Vivek. Thank you so much for having me on the show. So I think yesterday, Nifty, we saw it tested around 26,000. It could not sustain. It's an overbought zone as we speak. So there's a possibility that Nifty can sustain in the range of 25,800 to 26,000 until tomorrow's expiry. And post that, we may see a small healthy correction up to 25,500, which is a very strong support. So look to buy only on those support dips, and at current levels, one should just book your profits out of indices. If we talk about Bank Nifty, the expiry range for Bank Nifty is somewhere between 53,800 to 54,200 odd levels. I think that's a range where Bank Nifty may expire. It's good. It's stronger in comparison to Nifty. So Bank Nifty becomes a buy on dips, but the dips is around 53,500 to 53,300 odd levels. If that zone gets tested for Bank Nifty, one can buy on those dips and look for targets of 55,000 in October series. So both these indices are fine. The upside is still intact, but it's mostly like a buy on dip sort of a strategy.
Good morning, Soni, which are top technical trades for the day?
Certainly. So Vivek, the first pick would be from the cement space. That is Ramco Cement, which has seen a fresh breakout today on charts, and it's showing a bullish engulfing candle pattern. So one can buy Ramco Cement around 865 and on small declines up to 860. Keeping a stop loss of 845 and a higher target of 890 to 900 can be seen. The second pick comes in Tata Communications, which is consolidating to take a fresh breakout above 2080 levels. So I think for Tata Communications at current levels of 2050 and on small declines up to 2040 can be bought. A very strong support of 2010 can be seen at current levels. So keep your stop loss at 2010 and look for higher targets of 2120 and 2150. And both of these stocks can also be done in futures for October series as well.
Thanks a lot for that, Soni. Well, let's focus on another news piece that came in. Vivek, the National Electricity Plan has been announced, and that's one of the reasons why, in fact, we do have Power Grid that's surging in trade. Explain this to us.
Well, that's right. This is an important development, something that was expected as far as the entire power sector was concerned. So the draft NEP, or the National Electricity Plan, was in place. And what's happened in the last couple of days is the fact that the government has gone ahead and they have finalized this particular electricity plan. So what is it that they're saying? Number one, they've gone ahead and said that the spends that they have finalized is close to 9.15 lakh crore. Now, this is a significant spend. So what does this indicate and what will be the kind of capacity addition that you see? Number one, the plan is aimed at meeting a peak demand of close to 458 gigawatt. This is by 2032. Remember, you're also talking about the transmission network capacity targeted at getting higher from the current 4.85 lakh circuit kilometers to 6.48 lakh circuit kilometers by 2032. Along with that, the transformation capacity, that is also seen from 1251 GVA to almost 2342 GVA. So this basically means that there's going to be significant amount of spend as far as number one, laying transmission lines across the country. There is also going to be enhanced focus as far as ensuring that there is enough systems in place for green hydrogen as well as pump storage. And this is quite positive. Number one, of course, Power Grid, given the fact that it is the main transmission play in the country, but also players like cable makers, transformers, all of these guys too will do very well, given the fact that there is now a clear line of sight as far as ordering is concerned.
Okay, all right. Thanks, Vivek, for neatly explaining all of that to us. Well, I'll tell you what, for the time being, we'll slip in a short break. On the other side, we'll get chatting with Mr. Lalpuria of IND Count Industries. They've just done some inorganic growth. We'll understand more about Flovitex.
Welcome back to Chartbusters. Well, as promised, we will be going to the management of IND Count. Remember, IND Count's subsidiary acquired close to 81% stake in US company Flovitex. We are joined by Kailash Lalpuria, the ED and CEO of IND Count Industries, to discuss the recent acquisition and the future outlook for the company. Good morning, sir. First of all, thank you so much for joining us. Give us a sense of what was the rationale behind this particular acquisition. You also have an option to buy an additional 19% stake. So what were the valuations at which this particular deal was done, and what is the outlook here?
So good morning, everyone. This is a strategic move in order to build the utility bedding business, and it's a pivotal step as well as the stepping stone to, make US manufacturing active in utility bedding, where there is a large opportunity, and also distribution across the US. So this is a strategic move which we have been planning, and it overall builds a full synergy to our bedding businesses, because pillows are an important part of the product portfolio. And with the acquisition of Vamsuta, it also provides us in order to build up this business, which is brand, focused to distribute goods to both the existing customers and new customers in the US and Northern America overall.
Okay. All right. Hi, Mr. Lalpuria. Good morning and good to see you, Vin. It's been a while since we spoke. With regard to this acquisition, I'm just looking at it in the last few years. You have done revenues in the vicinity of around 25 to around $38 million approximately. But I believe you have ambitious plans. Could you tell us if in the coming year you can scale it up to, say, $50 million? Would that be something that you're looking at? And also in your current business, you do around mid-teens margins. On the acquired business as well, margins are around that 15-16%?
Of course, and that's why you see this acquisition has given us an opportunity to ramp up from the existing 30 million kind of revenue to almost 50 million within a year. Because the anchor customer, which is an existing customer with Flovitex already, has also assured us a 4-year renewal and a commitment to buy goods from us on a continuous basis. So this provides us a visibility of almost 125 million with just the existing customer. And then we will be able to divert this production to our other existing customers over there. So overall, we look at a visibility of almost 50 million plus revenues in the very first year of operations post-acquisition.
And on margins?
Margins, of course, you see, currently it is a margin-making company already. It will be in the range of 15 to 16%, and our endeavor will be with capacity utilization, with product mix which we are offering to the customers, we should be able to improve our overall margin profile as well into this business.
Mr. Lalpuria, at the end of Q1 FY25, you guided the street, to an FY25 volume guidance of 110 to 115 million meters. Now, with this acquisition, would you be looking to, go ahead and give an upsized guidance? Also, what will be the, resultant top line? Now we are almost at the end of Q2. So do you have better visibility in terms of what kind of realizations you'll be able to make over there? Also, the guidance you've given in terms of EBITDA 16 to 18%, this acquisition seems to be at a slightly lower margin profile. So would you be at the lower end of the guided band?
Not at all. We are on track of the guidance which we have provided, 110 to 115 billion. And of course, this acquisition would help us captively consume to certain extent of our capacity. So it will further add up to our volumes going forward. But you see on the Q2, we should be able to better provide you, guidance post our earning. Secondly, on the margin profile, as I mentioned, currently the capacity utilization is only 60%. And post this acquisition, we are building up the customer base and the product mix, which will help us scale up the margin to 16 to 18%, which we have provided for our overall business. Definitely, the capacity utilization will play the role of operational leverage, as well as you see the product mix, which we have completely on the bedding side, will help us scale up the product mix and offer both on the branded side as well as the non-branded sides to our existing customer and new customers, thus providing us the benefit of the margin profile.
Okay, all right. Mr. Lalpuria, just to get back to the acquisition that you were talking about, you're also getting 1.5 million quilts in that, I think so. And if I got it correct, the unitary pricing of a quilt in comparison to a pillow is nearly 4x. Is that a fair estimate, 4 to 5x?
Of course. And looking at all the logistic issues which, globally we are facing, quilt is an important part of our business profile, which we have acquired. And we should be able to also make, some sort of comforters and other field products over there. So definitely this will add up to the revenue and the margin profile.
Okay, all right. Now, how do you fund this? It's a small acquisition, $25 million approximately in total is what you'll pay. How are you positioned currently? What is the cash, the debt in your books as of now? You have an ambitious capex as well, I think, going ahead. So list that out for us as well. So what's the balance sheet looking like? And what is the capex plans for this year and the next?
So we all know that we have a robust balance sheet, and as a company, we have been conservative into drawing debt, and we will keep it like that. So our net worth is about 2,000 crores. Our long-term debt is only 175 crores on the books. Of course, we need working capital for the textile business, which is a 90 to 120 days cycle. So being conservative, you see the debt always will be drawn in order to fund the growth. And the board will appropriately take measures in order to fund this and finance this growth going forward too. So looking at last year, what we reported, the net debt was only 750 crores. So going forward, we will fund wherever there is a synergy of both revenue and margin. We will fund that growth both through internal debt as well as internal accruals as well as long-term debt. And so we will keep that. Yeah.
Yeah. So Mr. Lalpuria, running a little short on time. So you're saying you're very comfortable currently, but your capex plan is around 1,000 crores for the next few years?
The next few years, 1,000 crores, you can always take into consideration, but we have already spelled out that the core capex is already over. We have built in a capacity of 153 million. We are at 110 level. So 2 years, we are looking at the similar growth. We are investing into zero liquid discharge, into solar power for optimization and improving our overall profitability going forward. So wherever there is a synergy, the board will take appropriate decision to finance the growth and will take on steps to see how we can grow our bedding business in the USA because we are at a leadership position.
Right. Mr. Lalpuria, you spoke about USA. Now, 3 countries, and request you to keep your answer a little short because we're running out of time. There are FTAs, that are already present as far as Australia as well as UAE is concerned. Also hopeful of an FTA with UK. Could you quantify the opportunity size for you for FY25 and FY26, and do these typically happen at a higher margin profile?
The FTA for us is a cherry on the cake. We are already existing in the UK market with an office distribution, in Manchester and Leeds. So we have the entire range of customer base from high street, say a John Lewis or a Marks and Spencer's, or you name any of the high street retailers. So we have a large customer base, but of course, the FTA would provide us more competitive edge in order to improve our overall competitiveness across the product segment, whether it is we are now positioned into the mid to high segment, but it will also give us an opportunity to explore not only the luxury segment, but also the below the mid segment as well, where Pakistan and Bangladesh are having the duty advantage. So once the level playing field is there with the FTA, we will have more distribution of our product mix, and more, revenue will generate from this particular market. And we presume that what we have been informed by the government sources, that a lot of discussion has already materialized as far as the FTA is concerned. And there are only few things which are remaining from a policy standpoint in order to declare this FTA in the near term. So we are all hoping that this should help us, the entire textile sector to speeden up their growth into this area.
Okay, very quickly, Mr. Lalpuria, before we let you go, you seem to have laid out the capex and you're looking at brighter prospects for 2027. Are you on track to hit revenues of around 6,000 crores? And your VAP, value-added products, as a percentage of your mix is 20%. Where does it go to? What does it mean for margins? Very quickly.
So in FY23, Nigel, we had already embarked on a journey to double our revenue growth, and we are on track. Let me tell you, I'm glad to say that we are on track despite there are so many challenges out there, and there are a lot of uncertainties still holding out. But we are on track to double our revenues in the next couple of years or 3 years maximum. And also the margin profile will improve both due to the operational leverage and the addition of the utility, fashion and institutional business, as well as the branded business, where we also have started, our journey with a bang, by acquiring this Vamsuta brand, which is positioned into the specialty and departmental store categories.
Correct. So you'll double your revenues. What does it mean for margins?
Margins, of course, will improve. As I mentioned,
16 to 18%. 16 to 20.
It will further improve. That's what we endeavor to,
Got it.
So,
got it.
That's what,
all right.
We are hoping for.
Got it, Mr. Lalpuria. All the best to you. You have done this inorganic growth. It's looking up for you. You're going to scale it up to $50 million. For the overall business, you're guiding for better volumes growth ahead and also margin improvement. Thanks a lot for joining in. For the time being, though, we slip into a short break. You come back, we'll continue to focus on markets and stock-specific action.
Welcome back to Chartbusters. Well, big IPOs are all set to hit D Street. Market regulator SEBI has cleared food delivery and quick commerce player Swiggy's confidential IPO filing, and auto major Hyundai could also be set to list by Diwali in what could be India's biggest ever IPO. Winnie is here with more details.
Good morning. So yes, we're watching out for 2 IPOs this time, and Hyundai Motor, that's the first one. SEBI has given a green light for that one. Planning to raise around $3 billion in the IPO, and this is the second largest passenger vehicle OEM in India after Maruti Suzuki. They hold around 14.6% market share in the domestic market, and obviously in terms of exports also, they are the second largest in terms of the PV players in India. When you're looking at it in terms of the pricing and margins also versus peers, 9-month FY24 margins, when we're comparing them, it's much better than peers like Maruti Suzuki, Tata Motors, M&M, the auto segment of that. So yes, clearly an interesting one to watch out for. In this, the parent company, that's HMC, that's Hyundai Motor Corporation, will be selling 17.5% stake via OFS, as that is what we are picking up. Other than that, Swiggy also is yet set to got a green light for its IPO. That find a confidential draft for the IPO, and now they've gotten an approval for that. The price of the IPO, $1.25 billion is the IPO size. In that, $450 million is fresh issue, while OFS is expected to be at $100 million, and likely sellers in the OFS is expected to be SoftBank as well as Persys, who is holding 33% stake. There are a lot of key investors in this as well, and a lot of interest here, so keeping an eye out on that, because the company in FY24 had managed to reduce their losses almost by 50% versus the last year, as well as revenue had seen an increase as well.
Okay, all right. Thanks a lot for that, Vinny. Well, let's shift focus then to our special segment where we get you a few ideas for profit from Money Control Pro. Nitin Sharma of moneycontrol.com joins us to talk about a stock that he's tracking closely. Nitin.
Today's idea for profit is MapMyIndia. As a leading geospatial company in India, it has delivered a strong revenue growth in the last 3 years, while broadly maintaining 40% plus operating margin. In the Q1 FY25, company's performance was dull due to the softness in the automotive and mobility vertical. That led to a 5% Q-on-Q decline in the group revenue. In contrast, EBITDA margin expanded by 5 percentage points in absence of low margin hardware sales in the quarter. Hardware sales came down sharply due to the funding shortage with G-Trophy business and had a 10 to 12% impact on the overall revenue as per our estimates. Management now has a shareholders' approval for G-Trophy funding. Therefore, hardware sales should pick up in coming quarters. Recent win of Hyundai and Kia orders should also start reflecting in the financial from the Q2 onwards. Deceleration in the automobile industry may have a near-term impact on the business, while consumer tech continues to gain strength and expected to drive the company's growth. Multiple order wins in the quarter prompted management to retain rupees 1,000 crore revenue goal by FY27, FY28. However, management did not retain 40% operating margin guidance for FY25. Post recent correction, stock currently trades at FY26 PE of 52 times. Investors may use correction to build position in the stock gradually.
Okay, all right. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. You stay with us, though. Trading Hour comes up next.